Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, a European business editor here at the IB Times UK. Well, it's hard to slow down stocks in Europe today. They really are showing strength despite the myriad concerns investors may have from a macroeconomic perspective. FTSE 100 rising a bit more than 1% this morning. Vodafone driving that. I'll get to that in a second. And we're seeing similar gains across the major European indices. But that's against a backdrop of disappointing manufacturing data, both out of the Eurozone and here in the United Kingdom. March purchasing managers' index levels for both regions falling short of investor expectations, both under 50, that line of demarcation which separates contraction from expansion, and both suggesting contraction in the overall economy for the first 3 months of this year. In the UK's condition, that of course will likely mean a return to recession, the so-called triple dip, which investors and indeed policymakers have wished to avoid. It doesn't look like that's going to be possible now unless there's a screaming figure out of the all-important services sector here in the United Kingdom. We'll know officially on the 25th of April, or I should say we'll get a good indication. That'll be the first flash indication of first quarter GDP, but nonetheless it does seem increasingly likely that the UK is going to slip into that triple dip. Another piece of disappointing information out of the Eurozone today was unemployment for the month of February. That rose to an all-time high of 12%. It's absolutely an astonishing figure, and the breakdown around the rest of the region is grim reading indeed. And it does maybe give investors some hint or some suggestion that the European Central Bank might be moved to ease its key lending rate when it meets this Thursday in Frankfurt. That's not something the economists are betting on, but nonetheless, the fact that there might be some more policy easing from the ECB could be a portion of the reason why stocks are rising fast around the region, because there really isn't any conclusive denouement, if you will, from the situation in Cyprus. Even though capital controls are in place, the stock market is open, but the banks aren't trading, so we don't know exactly what the ultimate impact of their decision to haircut depositors is going to be. We don't know ultimately what the spillover implications are going to be for peripheral economies, particularly banks and particularly depositors. So there's so many questions left. It is surprising that we're seeing stocks up, but nonetheless, there we are. One of the big movers here in the United Kingdom is Vodafone. I mentioned that earlier. It's up a little bit more than 5%. Continued speculation that it's going to do something significant with its Verizon Wireless holding in the United States, that 50-50 joint venture, which generates an enormous amount of cash flow, but doesn't necessarily flow back to Vodafone. It really doesn't sit perfectly within Vodafone's more global portfolio. If they sell that, if they're able to IPO it, if they're able to do something with it, it will generate an enormous one-off profitable condition for Vodafone, which will of course lift the stock significantly, and that's part of the reason why it's up a little bit more than 5% today. And it's been one of the best performing stocks, it has to be said, in the whole of the FTSE 100. You can check out these stories and more on the IB Times economy page. We'll see you tomorrow.